So I wanted to understand, how do you decide when these 3P stocks, or not even 3P stocks, stocks like Amazon or Google, when they rally so much, how do you decide when to sell stocks that have worked for you? And a quick follow-up, do you short
I'm
stocks?
sorry?
Do you also short stocks? Do you short sell?
Yeah, so I have never shorted a stock in my life. I will go to my grave without ever having shorted a stock. I would suggest you follow that same mental model. If the only thing you learn over here is to give up shorting if you are a shorter, then I think it'd be an hour well spent. Um, so it's a great question. So each of us, I think, has a limited quota of 100 baggers that will show up in our portfolio. I think I have had more than my quota of 100 baggers that I was smart enough to buy, but too dumb to hold. And there's a long list. I used to own Kotak Mahindra Bank in '94. I don't know, it's 150 times. I probably got like 30% return after 5 years. Sold it. Blue Dart. There's 200 baggers I did capture. I owned Amazon in 2002, I think, at $10 a share. And I think it was 10% of my portfolio then. And I got 40% in a few months and I was out, so it was great. Anyway, so what I have learned is that don't sell the compounders when they get fully priced. And don't sell the compounders when they get overpriced. Only sell the compounders when it's absolutely obvious to you that it's egregiously priced. The big money is in riding the compounders. But you have to try to get in on them at a reasonable valuation, and that you have to be right on the fact that they are compounders. And so, it's a forgiving business. You can be wrong quite a few times and still be okay.
So Mohnish, does that by corollary mean that your buy versus hold criteria may not be identical?
It is not identical. That's correct. I mean, this is a very difficult lesson for a cheapskate like me. It was a very difficult lesson for Warren and Charlie. I think they learned that lesson from See's Candy. That was a seminal purchase for them. And they saw in that case, because it was a controlled business, they could just see the way it mushroomed. And so I think that if you get into businesses where management is exceptional, or the moats are exceptional, or in the case of Google, you get both. Buy one, get one free, which is great. Then I think those are businesses you just don't want to touch. I met some folks in India in some of these meetings that blew me away. I mean, in some cases, I just looked at it and said, this is there's tailwinds, but in addition to tailwind, there's a phenomenal operator, and the price was below liquidation value, and so those are all good tenants. So that's what we want to look for is. But clearly, in my opinion, I don't buy the notion that you buy your portfolio every day. To me, buy and hold are different. And the cheapskate in me still wants to not pay up. But I was able to, at a point in time, get to where Google was just at the edge of making it, so it made it, which was great. And that's the key, is that you want to ride the compounders for long periods.
This operator, by any chance, Piramal, or? Because I know you've
there
spoken about...
There are many. Piramal is a great operator. That wasn't the one. It's not below liquidation value. But great operator. But no, there are many in India, I think, who are young and great ethos, great drive. Piramal is an example of a compounder, and I think that if you own something like Piramal, I would just ignore the price for a long time as long as Ajay is healthy.